Good morning, good afternoon, good evening, esteemed guests and colleagues. I'm delighted to be hosting this session at the SANCAP Forum 2022. My name is Fatou Assa. I work at the International Finance Corporation as a lead financial sector specialist and program manager for the Global Index Insurance Facility. I'm here today hosting this session on Insurtech and the impact of the insurance sector through innovation in Africa. I'm delighted to present to you our panelists. First, we have Mrs. Anouk Arts. Anouk is with the Ministry of Foreign Affairs in the Netherlands. She has been our greatest supporter as GIF for the past 10 years. She focuses on agri-finance, inclusive insurance, and SME finance, and has been responsible to set up funds such as the Rabobank PPP, the Health Insurance Fund, One Acre Fund, and of course, us at the Global Index Insurance Facility. She has studied macroeconomics and financial economics at the Tilburg University, and she completed a postgraduate CFA program at Vrije University in Amsterdam. Anouk, would you like to give us a few words of opening remarks?
Yes, of course. Thank you very much, Fatou. And thank you very much for having me here today. I also want to welcome everybody here. It's a great pleasure to be here at the SANCAP Forum. I've been here before in the previous edition in India it was. And as Fatou already mentioned, my focus within the Ministry of Foreign Affairs is very much on inclusive insurance, and in particular for farmers, for the agricultural sector, because we believe that the agricultural sector is a very important sector for every economy. And if we want to include everyone in the economy, this sector is extremely important. And at the same time, the agricultural sector, farmers are also extremely vulnerable to climate change. So we need to help them to protect themselves against these climate risks. And we think that insurances are a really good tool to help farmers in this journey. But we also know that it's very difficult for farmers to get access to many financial services, including insurances. And that is because of the sector that they are active in and the climate risks, but also the distance from big cities, for example. And this is why we in the Netherlands have a very strong focus on this specific sector, and specifically on the financial inclusion of farmers and agricultural entrepreneurs. And this is also where the fintech and the insurtech comes in, because there are so many obstacles for farmers to overcome. And we believe that with insurtech, these obstacles can be solved. And insurtech gives access to financial services to farmers that they would otherwise not have. So again, I've been in a very lucky position to be physically there at the SANCAP Forum a few years ago, and to meet with all the insurtech entrepreneurs, the startups, and all the very innovative entrepreneurs who are probably, hopefully, listening right now. And again, I'm very excited to be here today. Very much looking forward to see all the innovations that you're working on. And I think for now, I want to give the floor back to you, Fatou. Thank you all, and have a very good meetings these days.
Thank you very much, Anouk, for your continued support, and we hope to be able to continue to achieve great things. So I'm going to introduce the structure of this session. So we have been very lucky to interest two of our colleagues, very experienced ones. The first one is Mr. Jamie Smouse. Jamie has over 20 years of experience as a banker and investor in emerging markets. He's currently the head of the insurance team at the IFC based in Washington, D.C., where he oversees the sector strategy and investment in insurance, brokers, carriers, and early stage insurance companies. Before joining IFC, Jamie worked in private equity and financial journalism. He is a graduate of Georgia and Georgetown University and holds a CFA. We also have a colleague, Levan Shalom-Baridze. He is a global investment lead for Insurtech and FinTech at IFC. Levan has over 20 years of experience in emerging markets globally. He is an early stage Insurtech and FinTech investor at the IFC, where he co-invests with venture capital and private equity funds. He specializes in disruptive business models and new technologies. Levan is a board member and advisory committee member of FinTech companies and investment funds. He holds an MBA from London Business School and an MS in information science from St. John's University, and a 5-year diploma in physics from TBC University in Georgia. So to make the balance of gender, we also have Lara Mengarelli. She's a vice president at the Blue Orchard. She focuses on basically investing in emerging markets in the insurance sector and fintech and insurtech sector. She currently works at Blue Orchard, which is an impact investor funded by donors like Insure Resilience. And she also has been a manager in corporate finance at KPMG and worked with Allianz and ZEP Associates previously. Lara holds a bachelor's degree and a master's degree in business management from Universitat Bocconi. So now that I've introduced the panel, what I would like to do is to give you a quick idea of what the Global Index Facility does, Global Index Insurance Facility. So we are an initiative started by the World Bank Group, so working across the IFC, and the IFC that focuses on private sector, as you know, and the World Bank that focuses mostly on supporting governments. So we work jointly, both institutions, to develop and help the growth of local markets for catastrophic insurance in developing countries, mostly in Africa and Asia. We focus on climate risk in agriculture and food systems. So in terms of tools, what we've been focusing on is index or parametric insurance, which pays out on a previously agreed index from weather and catastrophic events. The benefit of it that it lowers administrative costs, because as you know, admin costs are an item that tends to inflate insurance premiums. And the other benefit that because the parameter is pre-agreed, it pays quicker. Basically, the claims are being paid quicker. So what have we done to date? We have worked with many insurance companies in Africa and Asia, helping them develop products, design products, work with regulators to remove some of the entry barriers, support with premium subsidies where it was applicable. And through that work, we have helped these insurance companies issue more than 12 million contracts in 10 years, reaching about 60 million beneficiaries, and helping in facilitating close to 2 billion in financing, which is the value of input and finance. Next. So this slide just shows basically how we have grown from 2010, when we only had 14,000 contracts, to now close to 10 million. And we are hoping with a revamped strategy to grow to 20 million by 2025. So this slide basically just shows you the analytical underpinning of our work. And there are many studies that we are completing, many reviews of our work to take stock. But I just wanted to focus on two key items that actually will be discussed at this SANCAD forum this year. One is the Africa Insurtech mapping that we have done very recently, and that Levan will be presenting to you. Basically, the idea there is to try to focus on a few promising markets, a few promising countries to show early wins, support them with financing and also advisory services, and basically make early demonstration together with partners like Blue Orchard. The second piece of analytical work is our focus on gender, because G focuses on the rural sector, which basically in most countries, developing countries, remain the one where most of the labor force is. And knowing that women basically are the majority working in the rural sector, we thought that basically understanding better the needs of women farmers would help us basically close the protection gap, which remains a large issue for the insurance sector in many developing countries. So that piece of work is part of another session, which will be, I think, presented tomorrow. Next. So I just wanted to give some key highlights of in that slide of what my colleagues will be presenting. So this one is for the Africa mapping study, where basically we have analyzed some of the problems faced by traditional insurers. And in the next slide, in the next slide, some of the key drivers for growth. So Levan has kindly agreed to basically get into the details of this analysis and provide us some pointers as to what IFC considers as viable investment. Next. So this slide is for the next tomorrow's session. So Women in Insurance program is a dedicated program from the IFC. We're working jointly, the insurance sector where we are, where I am, Levan, where I am with Jamie. Levan focuses on Insurtech, and we have a specific program focusing on women in insurance. And we are doing, we have done a study over 3 countries: Nigeria, Sierra Leone, and Zambia. And basically, we're trying to leverage all these resources, all this knowledge, so as to basically provide the best tools in advisory services to our partners and clients. Next. So inclusive insurance for Africa and beyond. So this is basically where the GIF program is going. We've been focusing on very much proving that on the proof of concept, proving that agriculture insurance, disaster risk insurance can work at the micro level, focusing on basically production risk. So in the next step, so in this next decade, what we would like to do is basically to provide more protection, so to cover more risks, for example, health, and bundle these products so that basically the uninsured can have a better package and less costly package. Next. So why are we doing this work? I mean, how are we doing this work? So we're doing operational work in terms of assisting insurance companies on the advisory service side, providing them at the IFC, which is the most important part of the work, I guess, with direct funds. That this is what Jamie will be presenting as head of our insurance team. But also, we try to market ourselves, or to make sure that those new trends that emerge in the insurance sector are well known and well understood. And how are we doing this? For example, through in a collaboration with Sankalp, we have launched one challenge in India in 2019, one Insurtech and AgTech challenge. This Insurtech challenge basically was targeted, was focused on trying to solve the issues around data and analytics, sales and distribution, and premiums and claims. We had 9 winners selected from 24 challenge finalists. And yes, and I guess 105 people applied. So that was about 2.5 years ago. So what happened to those 9 finalists? This is what I wanted to stress here. So I just wanted to give 2 examples. One is called Niruti. Niruti was one of the, I think it was the one of the first winners. So now Niruti, thanks to basically the exposure we provided to that company and the grant that we gave to them, they are now a leading company in the weather index crop insurance sector, generating over $2 million in the current fiscal 21-22, with 100% growth from the previous year. So their testimonial is that the award prize was instrumental in supporting the validation of the weather gridded data for the pilot phase. And basically now they are a key player and data provider to the real sector, which includes agriculture, tourism, transportation, many other sectors. I also wanted to highlight another winner, which is called Moo Farm. They operate in the dairy farming. So I'm not going to say that it's thanks to us, but I think that basically being the exposure at the India Challenge done by Intellicap, which I guess is the head office of Sankap. So the exposure that they got and all the good publicity helped them network with other impact investors. And they have been, they recently raised, I think it was in December, $2.4 million in a seed round led by Acel India with the participation from Rockstar's Agri-Food Fund. So I'm just mentioning these 2 examples to show that these efforts of doing those challenges is worthwhile. And we're very happy that this year at Sankap, we have basically decided to do a similar Africa AgTech inclusive insurance challenge. We had 208 applicants from 25 countries across Africa, ranging from crop and livestock insurance product, innovative credit scoring technologies, to name a few. So this Friday, on March 3rd, we will be hosting a grand jury, and that grand jury will be selecting three top winners who will be receiving monetary prizes amounting to $50,000. So this is just one of the other ways that we have found to support young entrepreneurs, because this year specifically, we're targeting entrepreneurs that are 30 years old and younger. So without further ado, I'm going to give the floor to my colleague, Jamie Smouse, who heads our insurance unit, who will be providing to you some remarks on IFC renewed focus on risk management, closing the protection gap, and how AgTech and Insurtech is relevant to basically solve these challenges. Jamie, over to you, and welcome.
Hi, Fatou. Hello, everyone. Nice to see you. As Fatou said, my name is Jamie Smouse. I'm head of IFC's insurance investment business in our financial institutions group. Good morning, good afternoon, good evening, wherever you may be. So first, let me thank the organizers for making this happen, and Fatou and the panel for taking the time from their busy schedules to share their experience with us today. As Fatou mentioned, just want to take a couple of minutes to talk about why IFC as a private sector development bank invests in the insurance sector, our priorities, and the potential promise of insurance and technology to expand access to these products. By way of background, we've invested about 2.5 billion in strategic growth capital for insurance carriers, and more recently, Insurtechs in emerging markets, with the goal of expanding access to this area of the financial services. We believe strongly that our activities together with the World Bank address the twin goals of reducing poverty and building prosperity. And our engagements are designed to achieve outcomes that increase inclusion by giving more people access to better quality insurance. We think the sector provides significant development impact in some key areas. First, the non-life sector, fire, auto, and other non-life insurance products enable people to recover from unforeseen disasters. As Anouk was mentioning, especially in the agricultural sector, which is a very risky business, and farmers need this kind of protection. It also enables firms and individuals to take on riskier, profitable investments. Life and pensions products ensure comfortable retirement and protect income for dependents in case of death or disability. And health insurance, of course, can improve the quality of medical services and mitigate the impact of high out-of-pocket expenses. But despite these benefits, as Fatou referred to, there's significant gaps exist across these three main insurance segments. The life protection gap is estimated at well over $100 billion. There's 400 trillion of retirement savings that'll be required by 2050 for an increasing elderly population. Over 50% of healthcare costs are borne by individuals, and the health protection gap is over 300 billion. This leads about 100 million people into poverty every year from high healthcare costs. Cybercrime is expected to cost 10 trillion by 2025. These gaps, of course, are particularly large in emerging markets, which currently make up only about 20% of global insurance premiums. Yet, what's interesting is emerging markets have been growing at an average of 5 percentage points faster than developed markets, and this is expected to continue. However, it's important to note China, of course, has an outsized influence in these statistics. It currently makes up over 50% of premiums in emerging markets and has been growing rapidly itself. If you exclude China, Swiss Re estimates the real insurance premiums in emerging markets will grow at 2 to 3 percentage points faster than advanced economies. In the African context, of course, South Africa dominates these statistics, making up over 2/3 of premiums on the continent. But indeed, based on low insurance penetration rates of 1 to 2% in many African economies, we see Africa represents an extraordinary growth potential for the sector. And indeed, we've had a lot of success in Africa over the years investing in the insurance sector. If you think about Insurtech, we believe it represents a major source of innovation and growth potential for the insurance industry. I mean, despite the pandemic, Insurtechs have raised record amounts over the last 2 years, including over 10 billion globally last year. And as we know, Insurtechs make transactions throughout the value chain more efficient and effective. They can settle claims more quickly and increase customer engagement through a product's lifetime. They also offer the capability to reach and engage with clients in in rural and remote areas. I think telemedicine here is particularly important, and some of the agricultural insurance products as well. While they've typically focused on non-life insurance in the retail and the SME segment, I think Insurtechs, especially motor insurance, COVID-19 has definitely raised people's awareness around the need for life and health insurance, and accelerated people switching to online models, including telemedicine. So I think that's promising. Of course, some examples of technologies that are relevant to insurance sector include smartphones and smart devices that can track usage or behavior, such as driving patterns, fitness activities, burning of calories, in-home flood and fire detectors, satellite imaging in the agricultural sector, and many more. So the question is, I think, for all of us engaged in this sector, is how do we harness the power of the private sector and technology to provide quality insurance at a low cost to a much wider population? That's the challenge. That's been the challenge for a long time. Before I hand it over to Fatou and the panel, I think I'd like to reflect on what we've all just lived through these past 2 years. And As difficult as this has been to endure, imagine what it would have been like just 20 years ago. It'd be immensely more challenging, obviously. Today, we have the potential through science and technology to overcome the pandemic in a much shorter time period than previous generations. And indeed, the crisis is accelerating the adoption of technology and digital solutions across industries. In Africa itself, there's a growing urban and mobile population that brings tremendous potential to the economy. According to a recent IFC study, internet penetration is 40% today, and a 10% increase in mobile internet penetration can increase GDP per capita by 2.5% in Africa, compared with just 2% globally. If we increase internet penetration in Africa to 75%, it has the potential to create 44 million new jobs. And there's also a young and growing pool of tech talent in Africa, which together with this increase in digital connectivity will directly boost Africa's economic value. So it's an exciting time, and it's a very exciting time for Africa. And IFC is looking to partner with entrepreneurs, business leaders, researchers, thinkers, and others who can help us in this mission. So without further ado, let me hand it back over to Fatou to begin the discussion with our panelists. Thank you.
Thank you very much, Jamie. So I'm just going to try to make basically the interaction as lively as possible. May I ask you one question? So basically, listening to you, Africa is poised for at least a double-digit growth in insurance development. To capitalize on this growth, how much is IFC investing in insurance and Insurtech in Africa over the next 5 years? Do you have an estimate?
Well, I think if I look over the next 5 years, I see IFC investing $500 million globally, at least in the insurance and Insurtech sector. So I would say at least 25% of that, would be in Africa, maybe more. So let's say $100 to $200 million in Africa insurance and Insurtech over the next 5 years.
Okay, that's a great indication and segue to our colleague Levan, who will be discussing basically IFC's specific focus on Insurtech in Africa, starting with the mapping exercise that we just completed. Thank you very much and welcome, Levan.
Thank you, Fatou. My name is Levan Shalomberidze. I lead our investment activities in the Insurtech space globally. We have made 7 investments so far, spread over Latin America, Europe, and Asia. And at the same time, we have not yet invested in Africa, which is a key priority region for us. Hence this Africa mapping of the Insurtech landscape in Africa that we have done with the help of Dalberg, which I would like to really thank for their excellent work and the report they produced. Let's go to next slide, please. So as Jamie already mentioned, when we look at different markets and opportunities, we look at what's the insurance penetration in that market. The insurance penetration is measured by the insurance premiums, annual insurance premiums divided by the GDP of that country. And then we have the opportunity to compare different markets and different regions. As you can see from this slide, we have a huge improvement in Africa already on financial inclusion, availability of financial services to businesses and populations, largely because of mobile money, which is one of the biggest drivers, as well as increase of the bank ownership, bank accounts, right? We see the same trend with Insurtech, but the penetration still is quite low in Africa, with one exception, which is South Africa, which is an outlier and similar to what China is doing in the context of insurance compared to emerging markets. South Africa stands out. So we see the insurance penetration anywhere from 0.3 to 1.3%. With the exception of South Africa, which is about 12%. On one hand, it shows it's still at a low level, but on the other hand, it's an opportunity for growth and for better penetration of insurance in Africa and the potential of the market, including for the investors to support this sector and benefit from the growth. Next slide, please. So let's first analyze maybe what are the key factors that are hindering the penetration, right? So I think we have some of the things that are have been there for a long time, and some of them will probably be more difficult to overcome, but some of them will be easier to overcome with the help of technology, and that's why the Insurtech comes in. Just to summarize, we do have trust issues in some of the markets. The poor experience with the insurance company, not making a payment on the claim, that actually destroys the trust by the consumers and by the businesses. So I think in that case, we need regulator to step in and to make sure that the market is regulated fairly and we don't have those type of issues. There are also some religious and cultural beliefs in some countries, in some regions that are hindering. And the last one is probably complexity of products. I see a lot of times traditional insurance companies have a menu of the products they offer to the clients without really making it more contextual and making it more easily understood for the client. So, and again, I think with the technology, it's easier to change that. Once, on one hand, get the feedback from the clients with the use of technology online. On the other hand, design the products and change those products quicker, faster, and in a more flexible way. So I do believe that Insurtech companies will play a key role in overcoming some of these issues. Next, please. So having said that, the penetration is low and the market is still small. At the same time, we are seeing a pretty fast growth in Africa. If you compare to other regions, it's only behind Latin America in terms of the growth rate. The current market is estimated at 70 billion. It's growing quite fast, and then we actually expect this growth to sustain and maybe even accelerate in the future. I think Jamie also mentioned the impact of the COVID. I could not agree more that as difficult as COVID has been, at least it brought some positive trends in terms of better penetration of technology, adoption of technology and going online more and more, which will, and the reason it helps is the technology and online applications make it easier to connect, makes it cheaper to connect and to service these consumers, and hence we believe that the market will grow and the penetration will also increase. Next slide, please. So I already started talking about what are the solutions, right? So what are the things that can improve the penetration of insurance? Insurance companies are always concerned about the distribution, how to reach the customers, how to service them, but service them in an efficient and effective way and a cost-effective way. That has been an issue in the past. So that's why they employ brokers, they work with different brokers, they employ agents, and that's a bit costly. Now with technology, it's faster, it's easier, it's more flexible. So expensive distribution channels and the models can be replaced with more nimble and better channels with the help of online and technology. I already also referred to the traditional products that we see through better analytics, through better product design. This is being improved already. So we see emergence of better products and better understood and easy for the customers. And also we see that Insurtech companies are better at client relationships, understanding clients, having a direct dialogue with them, not having these different layers in between, which improves the trust in their services, and that should also help in improving the services and improving penetration. And the same thing with the customer education. So that goes hand in hand. Next slide, please. Now, I was actually quite surprised when I saw this finding that we do have quite a number of insurtechs emerging in Africa, and actually more than in other regions. So that speaks to the entrepreneurial spirit and nature of these countries, which is great to see. But we have quite a number of new companies emerging in this space, even higher than Latin America and Asia, and we have also faster, more rapid growth of insurtech companies launching in Africa. Again, South Africa and also Kenya are quite active in this regard, and they've given us 25 and 12% of insurtechs compared to the whole region. Next slide, please. Okay, so what are the drivers? What are the drivers? Why is this happening? Why are we seeing in more insurtech companies? And I think there are a number of factors influencing that. The first one is that I think the first two on this slide describes that uninsured, previously people that did not have ability, availability of these solutions and the products now are able to actually get exposed and get those type of services. So these new models are making it possible for both consumers and small businesses and others. Now, the traditional insurance companies have always been quite good actually at working with different partners, be it a broker or an agent, and in this case, we are seeing them quite open to partnerships with insurtech, so that they don't see them as the only threat. They also see them as a partner, which is a good thing. It's a positive. And at the same time, we are seeing the tech ecosystem is deepening. It's developing. We have a number of online e-commerce sites that are developing in Africa. And overall, the software, for example, the number of software engineers is growing, and the tech ecosystem as a whole is growing a lot. And at the same time, we are seeing consumers being more exposed and more involved with the tech solutions, and that also allows for embedded insurance. So what is embedded insurance is make insurance more contextual, more embedded in other transactions. You purchase something, you can get a warranty product at the same time, whether it's in the store or it's online. I think we are seeing more and more of those type of products. Next, please. So what are we seeing so far? And this will change. This is something that always changes. We see emergence of different models, new models, but so far, roughly we could say 5 or 6 different business models that we have seen within the insurtech category. It's the full end-to-end insurtech digital insurance companies that are online, serving their customers online, and sometimes they operate in a so-called MGA, managing general agent type of model, when they don't take the risk on their own balance sheet, but they are involved in both customer acquisition, product development, until the whole claims management and claims payment, so the whole value chain. And they sometimes work in partnership with insurance companies because of the licensing requirements. We also see emergence of online aggregators and online brokers. If we break them down into the more involved, more developed aggregators that have insurance companies as a partner in the behind, they're fully integrated with them. So for the consumer, for the customer, they seem as a company that provides the full service. But they're intermediating. So basically they're they're replacing agents and brokers, but in a more technological way. And then we also see some of the online advisors that are more of a comparison site. So it allows, I mean, it's great for customers. They can compare the products and choose the best one for them. It gives them more information. But as an investor, I actually like the full chain, value chain type of involvement in the aggregators that go beyond just comparison site. They also support these customers after they issue policies, including claims and including renewal and all of that. So that's on the B2C side. So the three models I described are on the B2C direct to consumer side. We also see B2B business models. People don't realize that insurance is a huge industry. It's 20% of all financial services industry, which is a huge industry, and it's actually in emerging markets growing quite fast. So there's a lot of demand from insurance companies to digitize, to become more technological, and there's an opportunity for Insurtech companies to get involved and support these insurance companies and act as either process improvers using technology or help them design new products or provide data and analytics type of services. So we see those three business models as well. Next slide, please. So far, we've seen the fully digital sort of full stack Insurtech companies, process improvers and product improvers as the three business models that have demonstrated some traction already, seems at this stage they are more attractive from the investor perspective. Having said that, I think markets are different. As an example, online aggregation is I think will take off in some markets, but there have to be some preconditions, some level of GDP per capita, some level of insurance penetration, as well as well-diversified insurance markets. So not the market that is not dominated by one or two companies, but is evenly spread, I don't know, maybe by 10 or more companies. I think those are the preconditions for a successful online aggregation model to take off in countries, and we will see more of that. So I just wanted to talk about that example as an example. But so far we have seen fully digital online business models, improvers and product improvers and process improvers so far. Next slide, please. I think the regulatory environment is quite important. And overall, we see the regulators are supportive. All of them understand the importance of financial inclusion, better access to financial services. So on a high level, they're quite supportive. Sometimes they need a bit more time to figure out exactly what steps should be done and what applies to their markets. And a couple of examples I would name is, we've seen some markets that establish regulatory sandboxes to allow Insurtechs to get involved, because sometimes the licensing requirements can be quite prohibitive, especially in the capital side. So start in a step-by-step type of approach. You start with this, you achieve this level, then you need to increase your capital, but give them a bit of leeway, at least in the beginning. I think that I've seen that in number of markets, which is successful. And also some countries have issued so-called virtual or digital licenses, not a full insurance license, but a virtual license, which is a bit easier to get and with lower capital and regulatory requirements as well. So those are the examples that we've seen on the regulatory side. Next slide, please. On the positive, we have seen quite a significant growth. The annualized growth rate of 61% since 2014 is quite impressive. Unfortunately, it starts from quite a low base, but still we have a pretty impressive growth in Africa. So let's see, even though we had COVID, I think we are seeing some recovery already from the investment sentiment in 2021. This was the record year in terms of investments. We should probably note that on this graph, you see the bottom half, most of these companies are pretty early. So the Series A dominates. So Series A is one of the earlier rounds right after the seed stage. Series B and Series C is still a bit lower on the lower side. Once these companies grow and they demonstrate traction, we'll see growth in Series B and later rounds in terms of the investment amounts. Next slide, please. This might be the last slide. Okay, so I'll stop there. I'll be happy to answer any questions.
So thank you very much, Levan, for this really exhaustive presentation. We currently are at about 70 participants in and out, at least 66 live, but I saw a few leaving. So, and a lot of questions coming from the audience. So I'm just going to ask one and then give the floor to Lara to give the investor's perspective. And then we will cover lump the questions in terms of basically their focus for each of you. So I'm going to ask you one interesting question from your mapping in Africa. It indicates that basically Insurtech categories include fully digital process improvers and product improvers. Is IFC interested in investing in specific firms in these broad categories, and what informs IFC's investments in such Insurtech companies?
Thank you for this question. So far we have identified 3 key sub-verticals within the Insurtech vertical, and we have invested in 2 of them so far. So we have invested in both online aggregators and brokers, and then we have invested in full stack Insurtech companies. We are on the lookout for the 3rd sub-vertical, which is solutions providers to insurance companies, whether it's software services or data and analytics, and you would put product improvers and service improvers in that category too. We have not yet invested in those, but we are very, very open to those categories as well. Now, what influences our decision is we are an early stage investor in the fintech team overall, including in Insurtech, but we are not too early. We need to see a bit of traction. We need to see a bit of, for example, we cannot be the single institutional shareholder typically in a company. And our sweet spot usually would be Series B and later. Sometimes we also invest in Series A if we have a good co-investor and we know the management team, but our preferred spot would be time to come in would be Series B. So that's one. And the other things I would mention, we are a minority investor, not more than 20. On average, we invest roughly, we get 10% stakes in these companies. So the quality of the management is quite important, as well as the co-investors and the shareholders, and obviously the business model. We have seen a lot of business models around the world, and the product feed, as well as total addressable market, would be key important considerations for us, as well as unit economics. We don't expect these companies to be profitable. They are startups in their early stage, but we want to make sure that on the unit economic spaces, these products they offer make sense. So those are the broad parameters when we consider new investments.
Thank you very much. I guess this is a perfect segue for Lara, who's basically focusing just on investing as an impact investor with those fintech and Insurtech firms. Lara, we took quite a bit of time. We've not been very fair to you, so perhaps if you can cover your talking points in let's say 6-7 minutes so that the audience can ask their questions. We have about 10 questions that we're trying to lump into for basically each of you. Thank you, Lara.
Yes, sure. So thank you, Fatu, for the opportunity to join this panel. Hi, everyone. So I'm Lara Mengarelli, Vice President at Blue Orchard, which is part of Global Asset Managers Schroders Group. And I specialize in private equity investments. I have overall about 10 years of experience in financial services and seen several business models across the insurance, Insurtech space over the years. So as a quick way of background, Blue Orchard has about 20 years of experience in impact investing. It was founded in 2001 for an initiative of the United Nations, and to date we invested over $8 billion in more than 90 countries worldwide, providing access to financial and related services to over 220 million people globally. We are a multi-asset manager with a traditional focus on credits, on private debt, and more recently we have been diversifying in private equity and sustainable infrastructure as well. So with the specific reference, just to set the background to private equity, we mainly focus on two pillars. So on one hand, we have private equity investments for climate resiliency, and on the other hand, we have private equity investments for financial inclusion. Regarding the former, our first mandate, which is now fully deployed and of a size of $80 million. So it builds insurance offering and ecosystem for climate resilience in our target markets. So to date, we have invested in 9 companies across emerging markets, achieving a climate resiliency for over 27 million low-income individuals, and we intend to grow this number to about 100 million by 2025. On the other side, so our equity strategy is also expanding further in the next months and years to capture opportunities across the full spectrum of financial inclusion, also benefiting from Blue Orchard network in insurance and lending sectors, and the aim is to additionally reach about 30 million low-income individuals with affordable and relevant financial products. So just not to repeat on what has been already highlighted by Levan, maybe we can jump to slide 7 of the deck. So I'm happy to give you an overview of some of our recent investments. If you can go to slide 7. One more, yeah, thanks. So yeah, as you can see here, for instance, this is, I think, a good example of how different players and actors within the insurance ecosystem can interact and partner together. On one hand, we have Royal Exchange, which is a traditional insurer, non-life insurer in Nigeria. We invested in this company at the end of 2019. We invested the $10 million. So our main goal was to promote the development and the spread of index-based insurance for smallholder farmers, protecting crops from excess rain and drought. On the other hand, we have AgriTask, which is an agri-tech company. They mainly offer high-tech satellite remote sensing solution. We invested in this company in June 2019, $6 million. So what is interesting is really the partnership that we managed to encourage between these two entities. So for instance, the Royal Exchange made an early move into agri-insurance in 2014 through a weather index insurance pilot project. However, they need a partner, a tech-based partner, in order to scale up their products and really reach out a bigger audience of end clients. So that's what basically happened since 2019. And since One AgriTask is working with Royal Exchange in order to provide a comprehensive agri-insurance platform, which is able to delivering relevant climate data really in real time. So this, this platform is allowing a traditional insurer, which is Royal Exchange, to provide customer with insurance dashboard that can be accessible by different web devices, and that of course can reduce some of the challenges we talked before. So for instance, to make the claims payout quicker, reduce transaction cost, and so better target the needs of the end clients. I don't know, Fatou, do you have any immediate question for me or from the audience? Otherwise, maybe yes. I can draw on some other examples.
Yes, actually, it's very nice that you basically have invested with an actual risk carrier and another one which is more basically a solutions provider. So it gives a range of what you can do. So one of the questions that I would immediately have is, because you're an impact investor, so what would be the level of returns that you would be looking at? And the second question would be, follow-up question is, how long would you be with the company before exiting?
Yeah, sure. So as an impact investor, we have clear financial return targets. As a traditional private equity investor, and our IRR is our target IRR is of 20%. On the other hand, being an impact investor for us is key also to deliver on both ESG and impact goals. And in order to achieve that, we have a clear internal framework that was built by Blue Orchard itself, which really help and support us in monitoring specific ESG and impact KPIs before the investment, but also during the investment period, and then specifically at exit. Coming to your second question, so our investment period can be flexible. We usually target 5-6 years, but then of course it also depends on market opportunities that can arise during the investment period, and also how much development we have made with the company itself.
Thank you very much, Laura. So I'm going to ask now your competition, the IFC, or basically an institution that I'm sure collaborates with you. The same question to Levan, actually. So do you have an idea? I mean, I guess now you have a clear idea of what you will be targeting in Africa. So what would be the level of return that IFC, that would be eligible for IFC's interest, and how long before exiting?
We don't have a one sort of number in mind. Within the fintech space, we actually see quite high IRRs, returns on our investments, north of 20% actually. And in terms of the horizon, the investment horizon, we would target 5 to 7 years in terms of our exit, our investment period before we exit.
Thank you very much. So now I'm going to ask a question from the audience, which is more, I think, at a larger scale. And that question would be for Jamie. So what do you think is the scope potential for reinsurance companies coming from Africa, even in the long term? I'll come back to that question. So I'm going to ask a question to...
Yes, hello.
Hello, Jamie. There is a technical issue. It looks like the voice is very faint. Oh, you're in the car.
Yes, can you hear me?
Yes, we can hear you now.
Can you hear me? Can you hear me?
Yes, we can hear you. Do you want me
Hi,
to repeat the question?
What's the question? What is the potential for reinsurance from Africa?
Yes. So basically, for new reinsurance companies to basically get your support from Africa.
Okay, thank you, Fatou. I mean, I guess reinsurance obviously is a business that requires, right, across markets and across risks. So you tend to see reinsurance, is a global business, I think. But there have been some reinsurers in Africa that have been successful. But I think in Africa, you need to work across the continent, obviously. We have seen some reinsurers emerge in certain single countries, but I think they sometimes struggle to be successful and get scale.
Okay.
Just wasted a minute.
Yeah.
Well, basically the bandwidth is very low, so I think we're going to go back to the other panelists. So there is a question very specific to digital microinsurance. So how do we introduce digital microinsurance effectively in Africa? Both from the study, what you have seen, and from basically for Laura as a practitioner, I mean, as with our experience on the continent.
Yeah, that's actually a great question, and we have seen, and we have actually invested at least in one company that does microinsurance quite successfully by being integrated with. This is in Indonesia. It's a company. Our portfolio company is called Pasar Polis, and they're integrated with the so-called unicorns, the digital e-commerce sites in Indonesia, in Asia. I mean, and also so-called super apps, right? So as an example, Jakarta has a huge traffic problem, right? So and then people that buy a movie ticket on let's say Gojek platform on their app, they have the ability to also purchase insurance in case they get delayed because of traffic to that movie theater. They get their ticket price back. So it's just an example. I love that example because, and then they are able, because of technology, this company is able to process thousands and thousands of policies, micro policies per minute, per second. I mean, traditional insurance companies would never ever be able to do that. Technology enables the processing of small, tiny products. So I guess the answer is having the great tech capability, the back office. What I mean is software capabilities. So having a great software stack that can tailor and issue these policies and process these policies and pay claims, small minor ones. But then you also need a distribution. So you also need to figure out the distribution platform for this type of policies. So again, either a connection with either mobile network operators or the super apps or the e-commerce platforms. So on both sides, on one side, ability to process, on the other side, ability to distribute those type of products. So those are the key ingredients. I'll stop there.
Thank you very much, Levan. Lara, same question.
Yes, thank you, Fatou, for the question. It's very interesting and actually gives me the opportunity to talk about a recent investment we did exactly in West Africa. So cannot disclose the name because it's still confidential, but I think I can broadly give you a framework to answer the question. So in this case, we have a non-life insurer in West Africa, which is providing microinsurance products to the poor and most vulnerable people through a well-established network of partners. Specifically, so they target on one hand mobile money agents, on the other hand taxi drivers or small-scale farmers, and overall always people, as I mean is usual for our target investments, that live below $10 US per day. And I think what is interesting in this example are probably two things. So first one is the ability of this company to make strategic partnerships, for instance, with a leading mobile network operator as well as a microfinance institution in order to develop a product and also effectively distribute a product to the target audience. And then the second aspect is the embedded nature of these products, which in this specific case are embedded within loans that are offered to the target group. So the target client buy a loan, and then there is an insurance policy embedded to that. And this, of course, is a key driver for a high uptake. So in terms of how digitalization can be developed in microinsurance, my answer would be so for sure on one hand in traditional insurers themselves can better digitize their products in order to make them more appealing and attractive for target clients. They can also do that through valuable partnerships, as this is, for instance, the case. And then, of course, as also Levan was highlighting, it is key to have effective distribution channels that are not necessarily the traditional ones that we have seen so far, especially if you want to reach an audience which doesn't live in urban areas. They maybe live in remote areas, in rural areas, like is often the case in West Africa. So I hope I answered the question.
Yes, very, very, very interesting examples. And it's great to see that you basically have a great pipeline besides those examples that you have clearly highlighted. I have another question because basically we focused on this on a few countries in Africa, really, in the study that we just completed. And it looks like I was really surprised to see that actually there are about 208 investment in Insurtechs, new Insurtechs in Africa. So I wanted to focus on Kenya. So Kenya is one of the largest markets, which was highlighted in the study. So Kenya has launched the BINA Innovation Lab to support regulators to better understand the Insurtech ecosystem and potential. So how can the regulators in other countries be supported to catalyze the development of Insurtech? So as you're working across countries, regulatory barriers seem to be one of the challenges. Sorry, I'm still admitting more people. So what has been your relationship experience, basically to push the boundaries of what's acceptable for regulators in the area of Insurtech? So Lara, first, since you were the last talking.
Okay, sure. Mm-hmm. Yeah, so thanks for the question, Fatou. Indeed, the regulators play a very important role in enabling Insurtech and innovative business model to spread out. And actually, they are faced with with a big challenge because on one hand, of course, the regulator, they want to promote the development of a country, and you cannot have economic development if you don't have innovation. But on the other hand, they also need to protect the final customer, and so be sure that the traditional insurers, but Insurtech and other companies within the whole ecosystem really act within a framework that can protect the end customer. I think so. For sure, there are a lot of challenges, especially in emerging markets and Africa specifically, but there are also opportunities. So, as main takeaways, on one hand, the regulators need for sure to to enable a bit more structure into the system overall, so to be sure they have also clear rules in terms of capitalization of insurers, so that customers are well protected, but they also need to be flexible and maybe to think about innovative and new frameworks. And one of those that we are currently seeing, actually working with an insurance and Insurtech company in LATAM, so in Brazil in this case, but it's a model that can be replicated easily also in Africa, is the one of the sandboxes. And these are kind of test and learn environments where basically the insurance players still have to, of course, meet some rules and act within a predefined framework, but they also have the freedom to experiment new solutions and new ways of doing business. And this is a very important item for regulators, because they will be informed about what is happening in the market, so they are up to speed, up to date, and then they can accordingly tailor their measures according to the newest trends that they see. And on the other side, and then I will conclude, you have insurers and innovators that can experiment with the new products and new ways of delivering solution to the end customer.
Thank you. That's, I mean, the idea of sandbox is something indeed that we have also picked up when we did our analysis for our strategy, our growth strategy. So Levan, same question to you regarding regulatory barriers, your experience in Asia, and what perhaps can be replicated in Africa.
Sure. So I like the sandbox approach, and I like the step-by-step approach. So regulators that engage, establish the sandboxes, start with minimal requirements, and then as these companies grow and take on more risk, then they also put on more requirements on them. But at the same time, they guide them, and they provide feedback, and they have a regular exchange with them. And I've seen several regulators do it quite successfully. One is actually Brazil. We are about to invest in the company in Brazil, and the regulator has been very helpful and very supportive of them. At the same time, of course, we all understand that the regulator needs to be prudent. They also need to, of course, have the policyholders' interests and protect those interests. But the insurtechs need a bit more flexibility in the beginning, and then grow with them, grow the regulatory burden also at this, with the same pace. In Asia, I've seen both Hong Kong and Singapore do it well. In addition to sandbox approach, they have also introduced a specialized virtual insurance license in those countries. So they've done both for virtual banks and also virtual insurers. So it's a separate license with a separate descriptions, a separate business model. But that's also one model that I've seen in those two markets as an example.
Thank you very much. So I have a question. So that's my own question. So the underlying assumption is basically that the digital access to internet, high-speed internet is available. So for us at the IFC, how have we been coping with that challenge? And same question for Lara, because I know that you are working with donors also. So when you've met, I mean, good investment potential, but there were some hurdles in terms of access to technology. How have you addressed that? So Levan first, since you're on the screen.
That's an excellent question. I think, yeah, it's an assumption that there is availability of the mobile phones, including smartphones, and internet penetration and internet connectivity, which in some countries is still a challenge. But at the same time, the penetration is improving. The cheap smartphones are available now, which was not the case before. So it's still a challenge, but it's less of a challenge as time goes by. That's my personal assessment. I could be wrong. In some countries, it's probably a bit more of a problem, but overall, we are seeing the situation is improving. As to IFC is quite active in the telecommunications space. Both from the sort of regulatory perspective, working with the World Bank on providing advice to the different governments, and also from the investment perspective, making investments in both the infrastructure, such as towers, telecom towers, as well as investing in mobile network operators. So I think we're trying to help.
Thank you, Lara.
Yes. So yeah, I fully agree with Levan that so it's technology and internet access is for sure a challenge, but situation is improving a lot. And actually the beauty of many business model that we are seeing so far and in the few past years is that they actually work well also on a pretty basic technology, which is the USSD, and in this way the end client can access online services, so also digital products, without necessarily having a smartphone. So actually, this is a very important enabler for the digital transformation of the industry that is currently in place. And then so our expectation is that we will see, actually we just did a recent study focusing on Africa, we will see an uptake higher and higher of smartphone and 4G, 5G technology in Africa in the next years, and these for sure will be also an important driver for investments in the industry and to further increase the insurance penetration.
About online penetration, and of course it's an assumption that that's good, and it's required for certain types of insurtechs, especially those going directly to customers. But even in markets where you have a lot of smartphone penetration, a lot of access to online, there's still a big market for insurance that is so-called offline, right? People who still prefer or buy insurance from agents and brokers. And so I do think, and we've seen this in some of our insurtechs, an ability to work with them as partners too, right? Or to help them in their other aspects of the value chain, right? So making the claims process more efficient, or providing technology to agents and brokers to make their sales process more efficient. So it's not always about going directly to consumers online. And it's also about trying to find ways to reach those consumers who don't like to buy insurance online, because I still think that's a huge market of consumers in emerging markets and even in developed markets.
Thank you very much, Jamie. I have a question specific to telehealth, which has been also identified as one of the major sector for growth for Insurtech. So the question came from one of the, sorry, I have a technical issue. can't find the question. Yeah, so telehealth in Kenya, the fact that introducing it might be too expensive if it was done on a monthly basis, but that there might be an opportunity to do it on a daily basis for 0.17 USD, for example. Do you believe, given the example, Levan, that you have provided on the movie theater ticket associated to a cancellation policy, basically, do you believe that this could be applied to telehealth in Africa, as described by this this member of the audience?
I think the answer is it depends, unfortunately. So we've seen the different models, right? We've seen the subscription model plus per visit type of fee, or just the per visit fee. I think people try to have the subscription model because they want to have an engagement with customers, and more of a regular sort of relationship, maybe provide advice, different health tips, things like that. But you know, it's possible that just engagement by engagement and that type of fee might, and that model might work. Personally, I would actually expect that more regular engagement, and which probably implies a subscription model, is probably better. But markets are different from each other, and depends on the market size and how the customers behave in those markets.
So basically what you're saying is that it would work more for prevention, but less for clinical basically interventions.
Yeah, I'm not a huge health expert, so you know, but that's probably right.
Okay.
Yeah.
Lara, any intervention in the telehealth sector?
No, Fatou, sorry. So we, so as mentioned, so we do not have a specific focus on this sector. So I wouldn't have any additional points on that.
Okay. So thank you very much. I mean, it's really been enlightening for me. I hope for the audience too, for the close to 70 participants. We have 3 minutes left. So I'm going to hold you the mic for your parting remarks, starting with Anouk. Anouk, as a donor, basically involved in at many levels of the Insurtech, fintech, microinsurance and interventions. Where do you see your work going by, let's say, in the next 10 years, by 2030?
Well, as already mentioned today by Jamie, but also by Levan and Lara, I think that Insurtech is making such big steps forward, and I see this increasingly also for the future. I think thanks to Insurtech, we can scale up a lot of more traditional initiatives that try to reach low-income groups. And I think in the next 10, 20 years, we can speed things up in a way that has never been possible before. And that also has everything to do with that almost everyone nowadays has a phone. Also just the feature phone, not even a smartphone is needed. You can do a lot of things in the Insurtech space with a very simple feature phone. So I believe both on the climate insurances, but also health insurances, that we can scale up and speed up reaching out to low-income groups in a way that was never been possible before. And so I'm very happy to see all the developments that took place in the last 2-3 years since the Sankalp Forum in India. I think now things have also changed again, thanks to COVID maybe also. So I look very positively into the future in this space. Thank you.
So thank you very much, Anouk, for your continued support. It means that you will still be with us, supporting our work, and we're delighted for that. Jamie, any parting words?
Hi, everybody. Just like to echo what Anouk said. You know, we're very excited to be involved in this sector and have, you know, very strong positive feelings about its growth over the next 10 years, and encourage people to reach out to us. You know, we collaborate with investors and entrepreneurs and others. So, you know, please reach out to us if you have ideas. As Levon said, you know, we work in a certain area, but, you know, happy to be going into more detail about, you know, what our investment criteria are, and just looking forward to working with everyone, especially in Africa, in the insurance sector over the next 10 years.
Thank you very much, Jamie. And as I said previously, we are in the same team. Jamie basically has the pocketbook. I'm more on the advisory services side, and Levan is basically the one pushing us towards the future. Levan, over to you for your parting words.
Thank you. So I would say we've seen a huge interest, huge growth, and even an explosion in the fintech space, especially in the payments and neobanking space. And the Insurtech is a little bit 1 or 2 steps behind, but we're seeing more and more investment and more growth in the Insurtech space. So I think the opportunity is there. The opportunity is huge, and I wish all the entrepreneurs that hopefully are listening to this a success. And we are here to, as Jamie said, we are there to support you in this journey.
Thank you very much, Levan. The money lady, Lara. We have received in the chat a lot of basically pitches for investment, which I will be sharing with you very soon. Any parting words?
So yeah, so wrapping up on the content of this interesting panel session, I think so narrowing the insurance gap is really key to foster the economic development in Africa, but I mean, in general, in all emerging markets. And to do that, the role of Insurtechs and the digital innovators, as well as the partnerships that they are creating with traditional insurers and other parties, are really essential to create products that are A, accessible, B, affordable, and C, relevant to the end clients, in order to really create trust and enriching the overall customer journey. And in this context, to me, investors will continue to have a dominant role as accelerator, because they can provide the capital to players in the insurance ecosystem, but also introduce insurer and digital innovators along each part of the insurance market value chain to relevant partners in order to reduce the transaction costs and increasing therefore the product's affordability. And investors also provide a valuable support in scaling up a portfolio companies' business model, for instance, assisting on a wide matter of topics like business strategy, product design, and marketing, for instance. So as already said, we are also absolutely excited and here to support potential new investee and entrepreneur in this journey. So thanks a lot for this opportunity to participate to the panel.
Thank you, Lara. That was really a very interesting, full of content, and really looking forward to continuing the collaboration with Blue Orchard. The one thing I wanted to mention is really that we are poised to continue this journey together. We see so much interest from many players that we have basically identified, from the donor community, also from private equity, I mean, across the board, even from regulators coming to us to help them with sandboxes. And what I can say is that we are very happy to have participated and joined forces with SANCAP to organize this event. We will be continuing to work towards the end of the week until Friday, where we have when we have the final concluding exercise with the challenge. We'll have basically one of us represented by Jamie as on the final jury. Anouk as a donor will be there, and we'll also have a representative of an accelerator. We hope that out of these three firms that will be identified, that all of them this time will receive some investment push. With those words, I can only thank the SUNCAD team headed by Ariel to have worked with us tirelessly to organize this session, tomorrow's session on gender, and the actual challenge. Thank my colleagues on this panel. Thank Anouk and Lara for all the great work, great support, and enthusiasm and encouragement. And Ariel, we're 6 minutes past the time. I'm not sure how we end there. So should I just say goodbye and thank you? Also to my team.
That's fine, Fatou.
Yes?
Yes, thank you. Thank you to everyone. Fatou, I'll leave it to you to wrap up. Thank you.
Okay. Thank you very much. I just wanted to thank the team, Anne, Doris, and Sandra, and Céline, who have tirelessly worked to organize the event, the challenge, and all the work around the colleagues, coordinating the colleagues. Thank you, and have a nice day, nice evening, good night. Bye.